All right, let's talk about GAAP and the development of GAAP. GAAP, which stands for the Generally Accepted Accounting Principles. GAAP determines the manner in which the accounting process is to be applied in specific situations. So, throughout the semester as students, we have been learning all these generally accepted accounting principles, GAAP issues, based upon certain circumstances that we're learning from chapter to chapter. GAAP says this, GAAP says that, and we take it for a leap of faith. Well, today we're going to talk about the development of GAAP and how it came about, these particular principles, and the major influences that help develop GAAP today. The first major influence is the American Institute of Certified Public Accountants, the AICPA. The AICPA is simply a national professional organization of CPAs. What the AICPA did, and hopefully we'll all be members of the AICPA one day after we finish our academia, they created the Committee on Accounting Procedure, CAP, in 1938, which issued pronouncements called Accounting Research Bulletins, which are ARBs, and published accounting terminology bulletins. The AICPA also created the Accounting Principles Board in 1959, which issued pronouncements called opinions, referred to as APB opinions. These were the predecessors to FASB. FASB evolved from CAP and APB because of the need for greater independence, greater inclusion from its predecessors. With a greater independence, greater inclusion, to develop, of course, generally accepted accounting principles. FASB, which stands for Financial Accounting Standards Board, was established in 1973, and it consists of 7 members who serve full-time and are paid full-time salaries, and thus no longer have partial commitments to industry in terms of time and, of course, livelihood. So they've severed their ties with their former employers, and now they include non-CPAs. They're more inclusive because outside of accountants prepare statements of positions so that users such as bankers or analysts can determine whether or not to make loans or to provide additional equity, etc., including you as someone who wanted to purchase stock in a company. You're reading these statements of positions, and thus it's important for you and this group of yous out there to provide an influence on GAAP. Before, CAP and APB were a part of the AICPA. FASB is no longer under the immediate purview of the AICPA. However, it should be noted that FASB is appointed by the Financial Accounting Foundation, the FAAF, who also appoints the FASAC, the Financial Accounting Standards Advisory Council. The FAAF its membership is influenced by the AICPA. FASB has 3 major pronouncements. The very first is a Statement of Financial Accounting Standards, SFASs. These FAASs establish new or amend existing GAAP. The next are interpretations, which simply clarify and explain and elaborate our previous FASs, APB opinions, or ARBs. And the next are Statement of Financial Accounting Concepts, SFACs, which set forth objectives and concepts that FASB uses as the basis for establishing and improving GAAP. It's important to note that ARBs and APB opinions remain in full force until superseded by FASB. So anything written previous to FASB remain in full force until superseded by FASB. So that's why today, even though we know FASB determines GAAP and not its predecessors, CAP and APB, we still read ARB and APB opinions because they haven't yet been superseded by FASB, and that's why you'll still see ARB and APB opinions in your textbooks. It's important to note that the AICPA also has what's known as the Accounting Standards Executive Committee. And what they do is they issue statements of positions, SOPs, which simply cover items that are not covered by FASB. So if you, as an accountant, etc., one day you're in industry, you haven't found anything from FASB on a particular circumstances that you encountered, you can still read over issue statements or SOPs that help you and guide you as you're creating statements of financial positions. The AICPA also distributes issue papers, and most importantly issued Rule 203 of the AICPA Code of Professional Conduct, where members like you must comply with GAAP or defend your position while you're not following with GAAP on how you're issuing your statement of position. What Rule 203 really did was it created a lot of teeth in terms of accountants following FASB and its predecessors, ARB and APB opinions that were issued in terms of following GAAP. Why should you follow GAAP? Well, if you're not following GAAP, what's going on is that it's encouraging you to follow GAAP, because as a member of AICPA, providing these particular financial statements, readers of those financial statements know that you're a member of the AICPA, a prestigious organization which follows certain protocols and rules, and thus they know that under Rule 203 that you will follow those rules, and they know that there is a certain benchmark of integrity in the statements of positions that you are creating as they are reading these particular statements of positions. If you decide not to, obviously you need to defend your position through the notes, etc., why you chose to represent your statement of position which deviates from generally accepted accounting principles. It's also another major direct influence of GAAP will be the Security and Exchange Commission, the SEC. If you recall from history, back in the early 1900s, we had the huge market crash, etc. So in 1934, Congress created the SEC, which has the authority to prescribe accounting practices for companies that offer securities for sale, basically protecting you as an end user, as an ultimate purchaser of securities to invest in, to ensure that your decision or your trust in a financial manager's decision was based upon statements of positions, financial statements with integrity and quality. It should be noted that the SEC has largely delegated this authority to the private sector organizations like FASB. But it's important to note, and it's important to keep up with the SEC, because the SEC has in the past vetoed standards set by private sector organizations. So the development of generally accepted accounting principles can be seen here by three major direct influences. The first being the AICPA, the next being FASB, and last we have the SEC as the last major direct influence that determines generally accepted accounting principles.